In order to succeed, you must fail so that you know what not to do the next time. Anthony J. D'Angelo. And Anthony is so right. You have got to practice, you've got to fail, and you've got to figure out how to do it right. How do you do that? 10 to 15 minutes a day following these 4 stock charts with us, learning the nuances of what it is to chart stocks and ETFs. What we teach you here, you can use on any chartable stock, any chartable ETF. You learn the essence of trend following, looking for these big weekly vertical crossovers that occur when the price percent oscillator crosses over the red signal line, either up or down. We add a little sophistication to things, even when the markets are crashing, like we have seen happen over the last few days with things like the S&P 500 and the NASDAQ 100 up today. Swing back, which is what we expected after the weekend effect from Monday, but still big down candles. But what do you do? Well, you can put your money in your practice trade into something like PSQ. What's PSQ? Well, it's the ProShares short of the QQQ, which is the NASDAQ 100. And it's been going up as the NASDAQ's been crashing. The same with another short ETF called ProShares short of the S&P 500. Same thing. Those are options. These are single inverses, not the dangerous 2 and 3 time inverses. But again, things just to experiment and look at. We want you to be able to be comfortable looking at up and down moves. So we're going to jump into these markets right now. We see the S&P 500 swinging back volatilely, up for the day 5.17%. But what do we see drawing right here? Our average pace candlestick, that's the Heiken Ashi candlestick. It's different than your usual high, low, close, and open. That's your typical Japanese, traditional Japanese candlestick. This is a candlestick that helps you see visually, okay? That's what candlesticks are all about, is visually. You can see the average pace of price movement. We see it still down. Look at our price percent oscillator, still hammering down. Derivative oscillator, still hammering down. We go from the weekly to the 2-day. What do we see there? Still hammering down. So the overall trend is still way, way down in these markets. Strong down on both the weekly and the 2-day. We are looking at perhaps somewhere where there might be a floor around that 275 mark on the S&P. We'll keep our eye on that. We have seen things over the course of this last day, and we'll look at this 4-hour chart where you see things bounding down and again touching on that line and somewhat holding. Derivative oscillator down in the morning, losing a little bit of downward energy in the afternoon. Price percent oscillator still negative, is heading up. That's just the 4-day chart. Let's see how things settle here. Have we reached a bottom, or are we just catching our breath before the next plunge? Let's see. We'll continue to watch, see what there is to see and learn there. If you're in that down move, depending on when you got in and what your loss limits were, you may still be hanging out down there. Why? Because you're looking at the 2-day chart and you're looking at the weekly chart and you're seeing all this continued downward pressure. Not a bad thing for you to do in that practice trade. Continue to look, watch, pay attention. Let your loss limits as well as the bigger charts guide you. Remember, we always have loss limits to pay attention to. And folks, this is a great intro into the training we just did for you this afternoon. It will be posted in the show notes for everyone who subscribes at chartingwealth.com. You go there, sign up for free, put in your name, email address. You will get our daily reviews and the special trainings that we put out on a daily basis. The one today, it is unlisted. You will not find it anywhere else. Using order size to control risk, which is exactly what you need to know about, exactly what you need to do in these super volatile markets where you are following trends, but the volatility could kill you. So what do we talk about doing? We talk about limiting our order size using preset points that when the market passes those, you can increase at penetration levels and put more into your practice trade. I want you to take that training. It's in the show notes for all subscribers. If you're not a subscriber, then you're missing out on all the special trainings, including the 3-part option series and all that stuff. By the way, Patreon members, just sent an email out to you. We have the live call-in question and answer session, some more in-depth training for you tomorrow at 10:30 Eastern Daylight Time in the States. We appreciate everybody who calls in and joins us. If you're not a Patreon member, sign up. You sign up tonight, I'll do everything I can to get you in that tomorrow. Follow the link in the show notes. So, what do we see going on as we leave stocks? We've looked at where things are on the NASDAQ 100 and going down, and then sort of leveling off. We're seeing the same thing on the S&P. The derivative oscillator still negative on both those 4-hour charts. Price percent oscillator heading up. The bigger charts control. Pay attention to your loss limits, your volatility, but in particular those 2-day and weekly trends, what the weekly chart is doing. And that 2-day chart, as long as they remain strong down, all things being equal, the market always tends to move in the direction of the largest chart, which is our weekly chart. We're going to leave stocks and we're going to go to bonds. Big pullback today on bonds. We don't start off with the weekly chart, with the 4-hour, always start off with the weekly. What do we see there? Again, 2 days in, gigantic candle with a long wick on the top. We've seen a little bit of weakness creeping in because we see the price percent oscillator bending over, still ramping up. The derivative oscillator is still moving up quite strongly. Go to the 2-day. What do we see there? It's weakened some also on the price percent oscillator. We see it on the derivative oscillator, but this recently completed 2-day candle, still big up candle with a big wick on top. Price is well above the weekly and the 2-day. And then we go to the 4-hour. What do we see there? Well, things topped in the morning on Monday. Weekend effect was in effect. Monday effects, it's sometimes called. We had a training for you over the weekend on that. And then we see things rolling over, moving down. Hasn't crossed over yet on that 4-hour chart, but the derivative oscillator, our leading indicator, our lagging indicator, hasn't. That's the price percent oscillator. We'll continue to watch, see what there is to see and learn here. But that's where we are on bonds. Some weakening, but again, the 2-day and weekly remain strong. Let's see what that market does on Wednesday. Lastly, we go to gold. Gold pulled back also. Now again, charts are doing what we want to see them do. When stocks are going one direction, the price of gold, the gold ETF and the bond ETF should be going the other, and they are. Gold is down 2.11% for the day. We're not reaching a high. Well, let's see. Yes, we're barely reaching a higher high when it comes to gold. That happened on Monday. We do see price still above that weekly trend line. Price percent oscillator really flattening there on us. Derivative oscillators going negative. Now, we haven't finished drawing this candle yet. Just 2 days into a 5-day candle, so we will pay close attention to that. But we do see some weakening right now, 2 days into a 5-day candle. What do we see on that 4-hour chart? 2-day chart. We see it is heading down. We have a red open box candle. Now, that's not a strong red down candle. Solid candles, down movement. Open box candles, up movement, but it's a slowdown in the move up. We still see a higher high there, but we do see a slowdown derivative oscillator gaining downward momentum. Price percent oscillator heading down, but still positive. That is some weakening to pay attention to in gold. And of course, what did we have happen at the end of the day? 4-hour chart crossed over going down. Derivative oscillator went over to negative. What does that give us an opportunity to do? Wait for a recross on that 4-hour chart going back up, if indeed that occurs, for a jumping in point on more up moves in gold. If that happens, we'll watch, see what there is to see. A lot of up movement in gold lately. These are the first 2 red down candles we have seen since all the way back on the 28th of February. We had 2 together, and then we had another small one there in the afternoon on Monday, the 2nd of March. Folks, that's where we are as we end the day. Again, another reminder, Patreon members got that special training, 12:30 Eastern Daylight Time on Wednesday, March 11th. Want you to be with us. If you haven't purchased our book, we are getting the new printings in. They are at the printers and being delivered sometime this afternoon. So again, new copies of Charting Your Way to Wealth, autographed copies available for you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.